Hey everyone, welcome. So, if you've been trying to keep up with the housing market, you know it's been a total roller coaster lately. But, just in time for the spring season, we've got some surprisingly good news that's absolutely worth digging into. A really key number just hit a huge milestone. So, let's get right to it. And there it is. That's the big number. For the first time in what feels like an eternity, a major mortgage rate tracker has actually dipped below that 6% mark, landing at 5.99%. I mean, this is a multi-year low, and it's just a huge breath of fresh air for anyone even thinking about buying a home right now. And let's really put this in perspective, right? For the past few years, anyone looking to buy a home has been staring down rates of 7, even 8%. That kind of pressure just makes it so tough for the housing market to get any momentum. So to see a number that starts with a 5, that's a massive shift, both psychologically and, of course, financially.
Okay, but this number didn't just fall out of the sky. There are some really specific things happening behind the scenes, financially speaking, and we're about to break down exactly what's going on.
That's the real question, isn't it? I mean, if we want to know if this good news is going to stick around, we have to understand what's causing it. And the answer, well, it might be something you haven't really heard much about before. So let's talk about the unsung hero in this whole story, something called the mortgage spread. It's not flashy, it doesn't make headlines every day, but how it's been behaving lately is pretty much the main reason we're seeing these lower rates.
So what in the world is it? Well, to put it simply, the mortgage spread is basically the lender's profit margin. It's the gap between the rate they charge you for a mortgage and the rate on a super safe government investment, the 10-year Treasury bond. When that gap, that margin, gets smaller, your rate gets lower. Simple as that.
And this right here is the absolute key. We've seen the 10-year Treasury yield at these levels before, without mortgage rates dropping this low. The real game changer, the single most critical factor, has been that this spread is finally normalizing. It's shrinking back down to a healthier size. Okay, now check this out, because this slide tells the whole story. Look over on the left at 2023. Even when the 10-year yield was under 4%, those really wide, unhealthy spreads kept mortgage rates way up above 7%. Now look at today on the right. The 10-year yield is in the same ballpark, but because those spreads have gotten better, mortgage rates are now below 6%. That right there is the power of this spread. But, the spread is only one piece of the puzzle. To really get the full picture, we've got to look at the other partner in this relationship, the bond market itself. This is what's fundamentally driving everything. I just love this analogy from the source material. It's so perfect. Think of it like a slow dance between the 10-year Treasury yield and the 30-year mortgage rate. They're always moving together. Sometimes they're a little closer, sometimes a bit farther apart, but they are always in sync. And in this dance, it's the 10-year yield that leads. The mortgage spread, that thing we were just talking about, that determines how close the dance partners are. But the overall direction of the dance, whether rates are generally heading up or down, that's set by the bond market. And it's been this way for decades. And this chart just lays it out perfectly. The 10-year yield, here on the left, under 4%, that acts as a kind of floor. The mortgage rate that you actually pay, on the right, around 6%, is that floor plus the lender's spread. So when that spread shrinks, that second bar just gets closer to the first one. It really is that simple. All right, so we've gone through spreads, we've gone through yields, kind of nerdy, I know, but let's pull it all together and talk about what this actually means for you right now as we're heading into the big spring housing market. So here's a quick snapshot of the current landscape. We've got mortgage rates under 6%. Check. We're seeing more homes for sale, so inventory is up. Those all-important mortgage spreads are getting back to normal. And, crucially, home price growth isn't just spiraling out of control anymore. So when you put all of those pieces together, the conclusion is pretty clear. This is a much healthier, much more balanced housing market than we have seen in years. For all the buyers and sellers who've been patiently waiting this whole time, honestly, take this victory. Which brings us to the final question, and this one is for you. With rates down, inventory up, and the market finally showing some real signs of stability, could this be that window of opportunity you've been waiting for? Definitely something to think about. Thanks for tuning in.